The trade war with China is taking longer than any of us would like. Welcome to Street View. The trade war with China is taking a lot longer than any of us had expected. I think both parties are in a major negotiating tactics right now, and we must be mindful that President Xi has a job for life and President Trump has a job interview a little less than 2 years from now. I think the president in the U.S. right now is looking at really a Fab Five of economic data points that are really contributing to his tactics in negotiations, whether you look at 3% GDP, 3.6% unemployment, 3.2% wage growth, 2.4% productivity, and the Fed's favorite inflation indicator is only up 1.6% on a year-over-year basis. So the president does have some negotiating chips here on the table, but we must be mindful also of the fact that we buy approximately $400 billion from the Chinese. They buy about $100 billion from us. So there's another chip on the president's table. Nonetheless, the market is starting to send signals. We're seeing the yield curve flatten, if not invert further. We're also seeing copper pull back. And I ultimately believe what's going to drive both parties to a final deal will be the equity market. Historically, it's the bond market that sends the troubling signals, but the Chinese stock market's down about 12% from its recent high. The U.S. equity market is only down about 4% from its recent high. So consequently, we're going to be focusing on the equity markets. We're going to make sure portfolios remain diversified, and any pullback we will use to our advantage. Thank you very much.